Today we're talking about equipment leases with Ohio Valley Bank's Bryan Stepp. Do you have the inside track for your business? Stay tuned to find out the details. Good afternoon, everyone, and welcome back to Common Sense, the monthly cable TV show here on Channel 17, where we talk about business issues related to small businesses and the banking industry. And today, Ryan, beautiful day outside, the sun's shining, the birds are singing. It's just a great day to be alive.
Yeah, and 40 degrees and snow.
Yes, it is.
On top of that.
But every day's a blessing.
That's right.
So we'll just leave it at that. So anyway, on today's show, we're going to be joined by Bryan Stepp from Ohio Valley Bank, and he's going to talk about leasing and how it can fit into your business plan for your small business or your large business, however it is.
Right.
But talk about some of the different benefits of leasing and why you'd want to consider leasing maybe over buying.
Yeah.
Bryan is the Senior Vice President and Chief Lending Officer for Ohio Valley Bank. Good afternoon, Bryan. Welcome to the show.
Thank you very much.
And why don't you start out today by telling our viewers a little bit about yourself and your role at the bank and maybe your history there at the bank.
All right. As you mentioned, I'm Chief Lending Officer for the bank. I've been in banking for about 33 years. Been with Ohio Valley Bank for 10 years. Being with the bank involved with a lot of community things like the Mason County Development Authority, Rotary, other institutions like that. Pleasant Valley Hospital Foundation Board and things of that nature.
Okay. So I guess we're here to talk about business leasing today, or leasing equipment for your business. So let's jump right into it. And I guess one question that a lot of folks would have is what types of business or what types of equipment can you lease as a business?
Really, you can lease just about any kind of equipment you can think of. Any office equipment, rolling stock, the typical things people think of are dozers, end loaders, but you can leasehold improvements, like I said, office equipment if you need to. You can structure any of them in a way that can work under a lease. Anything other than real estate, you can set up under a lease on that.
And when you say rolling stock,
meaning something with wheels, like a truck, car.
Yeah.
Things of that nature, trailers of that nature,
sure.
If I'm referring to there.
Okay.
So what are some of the benefits? I know, here we are trying to determine the benefits of leasing versus buying equipment. So what are some of the benefits? If I'm a small business owner, why would I want to lease versus buy?
There's probably 3 or 4 main advantages. Each of these you would need to consult with your tax preparer or accountant to see which one of those would be the best for you. But again, you can set up leases to where it can be a tax advantage for you because in some instances you can expense a higher rate than if you buy it outright versus depreciation, or the interest that you can deduct on your taxes. But again, you would need to, each situation is different on that, but there are some tax advantages in some circumstances. Another advantage is that at times you can finance 100% of a purchase versus having to put a down payment down. Again, you can structure them that way to where it will allow you to do 100% financing if that's what you need to do. Another advantage or thing to consider would be is that sometimes you only need some equipment for a short period of time, and you may not want to commit to buying a piece of equipment that you're only going to use for 6-8 months, or and something that may cost you several years to pay off if you have to borrow to do that. So you can structure leases that allow you to have it for a short period of time and not have to pay for a long-term asset in that instance. And then probably the last thing is, and this is becoming less and less of an advantage because they keep changing the tax rules on us and the accounting rules on us, is that in the past, most leases are what were called off balance sheet.
Okay.
And because of that, it didn't affect a lot of the ratios that can affect if you have other bank debt or bond debt on your balance sheet. It didn't count against you in that. but they are making that harder and harder to qualify for. So again, you would need to get with your accountant to make sure that you were structuring properly and not doing anything that would hurt you going forward.
Right. Okay. So if you are a business owner and you're looking down the road a year or two and you have a bigger purchase, a big acquisition, maybe it's a new building or more property that you're wanting to acquire, if you go out and purchase a piece of equipment now, that's really going to show up as a big debt load to your business. But leasing could make it look like you have less debt.
Correct.
And make you more bankable in the future for that other piece of
it could very
big real
well.
estate or something.
And the other thing for a new business, especially if you're a startup or if you're going into a new line, it lets you get into that without the long-term commitment sometimes of that. And that sometimes that is very advantageous, especially for startups, because you don't want to get into a startup. You don't know if it's going to work or not. You don't know if that's going to be a profitable business. And the less commitment you have over a longer period of time might be better for you in that sense.
And Ryan, a lot of times we talk with our clients at the Small Business Development Center, and we kind of emphasize the importance of business planning and financial planning. And this is just a very key example of that as to how you can position yourself in the future by doing your homework up front before it's kind of too late. I wish I could go back 2 years and change something.
Oh, absolutely. And just like Bryan said, this is a great tool to use for a startup venture where you're not making a long-term investment, and we want to make sure it works first.
That's right.
One question I have when we talk about leases versus loans is the payment issue. I know we haven't really talked about it, and I know the answer to this is probably going to be it depends. But when someone leases a piece of equipment, is that typically is the monthly payment on that typically comparable to what a loan on that piece of equipment?
It can be. Again, it all has to do with what your strategy is with that piece of equipment. Okay. Because if you can have those set up to where there's a large residual amount at the end, and the bigger that is, the lower your payment's going to be. So depending on how you're wanting to, as you were saying, plan and what you see as your future capital acquisitions and things, you can structure that up or down. But if you're looking at typically something that you're going to, some leases are set up to where you can buy that piece of equipment for $1 at the end of the lease. If that's the case, you will see a payment that is very similar to a loan payment.
Okay.
Now, when you start changing any of those terms, you can move that payment to where it fits what your goal is and what you're trying to plan.
Yeah. Well, that's another great option, or leasing, for the financial planning for starting your business, or like you said, starting a new line, and just to make sure it's going to work. So, our leases, when we think of a lease, we think of a certain amount of time. You're going to start it on January 1st and it expires on December 31st. Are there such things as an open-ended lease?
There are some that can be structured that way. It's not real usual, but you can have them set up, especially for your large equipment, and especially if you're going through a large equipment operator. Some of them are set up to where it's almost like a month to month. You're going to commit for at least 6 months of that equipment, but you may need it longer, and you can just go in and re-up that lease at that time.
Sure. Okay.
So let's say I'm a small business owner and I come to you and I'm interested in leasing a piece of equipment. I want you to help me with it. What are some of the questions that I, as a business owner, need to ask about the lease before I really help me make a good decision?
Well, part of what, as far as with the leasing company and or bank, depending on how you're flowing that through, is what is the underlying interest rate on the lease? Because some of them are set up just like a loan. There's an interest rate involved, and that's how that payment that you mentioned is calculated on that. You'll want to know what kind of terms typically they do on that type of equipment. There are certain pieces of equipment that they're not going to want to lease for 7 years. If it's a IT equipment, that's it becomes obsolete pretty quickly on that. So those leases are usually shorter term on that versus a big piece of equipment like an end loader or a dozer you could get for a significantly longer period of time. So you'd want to know what the parameters of that particular place is on that type of equipment, what the underlying rates are, and then what it would cost you if you choose to either want to stop the lease early and or to buy that at the end of the lease, what their residual cost is.
Okay. So a lot of the, say, credit decision making in a lease, it could be similar to the credit decision making.
It's almost exactly the same.
Okay.
I mean,
look at the same factors.
You're looking at what the credit worthiness of that person or company is. You're looking at cash flow of that business to make sure that they can cash flow enough to make that payment, and or if they have a project that's specific for, and especially if it's a new line, if they've got a contract for something, then you know that they've got a contract set up that's going to help pay that payment on that.
Now, just to take that a step farther, we did mention startups, and I know startups are very hard to finance. Is there a little bit of flexibility with a lease versus a loan for, say, just a general business startup?
A little bit, and again, depending on the size of the lease and things,
Sure.
a lot of times if it's a smaller piece or a smaller dollar amount, even on a loan or a lease, we're looking at the individual, especially in a startup, and we're looking at what your personal credit history is, how well you've handled credit in the past. You know, what are you highly leveraged or not? You know, do you have equity in something on that?
Right.
So it's a very similar process as far as underwriting a lease versus a loan. We're looking for the same types of things.
And one thing, when we talk collateral, that could be a little different, lease versus loan. For example, you know, the leasee's not going to require the business owner to put a second mortgage on their house.
No. Typically, the collateral will be whatever it is that you're leasing. Now, it is not unusual for the leases for you to have to personally guarantee it.
Sure.
Their expectation is that even if your company's not making money, that you have the wherewithal to make the payments personally. So it's not a way to get away from having a personal responsibility on that.
Right.
That's good to know. Yep.
Okay. Now, say I'm a business owner and I have multiple pieces of equipment that I'm wanting to lease. Is each one of those a separate lease, or can they be kind of conglomerated into one lease agreement?
You can do them all at once.
Okay.
Again, a lot of that will have to depend on what type of things you're wanting to lease. You know, you may not want to mix different categories together because of the length of time that you can lease that for.
Okay.
Just like I was talking about IT equipment versus heavy equipment or something of that nature. But you could do a blended. I mean, there's a lot of ways to structure those. They can be separate together, but typically, if you have different equipment classes, what I'll call, meaning, you know, like I said, equipment versus office equipment and stuff, those would typically be separated on that.
Okay.
But you can do a bunch. I mean, if you're buying 5 dozers, you can lease 5 dozers at a time, and all be in one lease.
Okay.
In that.
Well, I know a lot of times on TV you see vehicle manufacturers offering lease programs as opposed to outright purchasing. And of course, with those, a lot of times there are limitations.
There's a lot of fine print at the
bottom.
bottom.
A lot of fine print at the bottom.
Yes.
So when we're talking business equipment, are there mileage or hours limitations tied to those pieces of equipment?
There can be, and if there are, they will have a direct effect on the residual amount that you pay at the end.
Okay.
In other words, the more restrictions there are on it, the higher that value is going to be at the end. They're going to require you to keep maintenance on it.
Sure.
You know, if it's a truck, you're going to have to change the oil and prove that you've done it on a regular basis, either a time basis or a mileage basis. Or if it's a piece of equipment, It's going to have its regular maintenance after X number of hours, depending on what type of piece of equipment that is. But you're going to have to maintain that, and you're going to have to show that you've done that, and that's mostly for longer term. Now, if you're just leasing something for 3 to 4 months, that company that's leasing it to you is probably going to do all the maintenance and have it ready for you there.
Right.
But it's for what I'll call longer term leases that you would be responsible for that.
Okay.
Well, what you just said brings up another question. You see companies that will rent equipment to you. Is there any difference between a tool rental place versus actually leasing the?
Not really.
Not really.
It's
similar.
It's really the same
Okay.
same thing.
Yep.
And one of the things that you just mentioned about, some of the equipment and kind of the longer term, and obviously most of the manufacturer warranties are in place for that piece of equipment for X amount of years, whatever that is. That can also be a really good budgeting tool for the business because, they know it's a new piece of equipment. They know for the next 3 years they're not going to incur any repair costs or major, there's obviously the maintenance like we talked about, but there's going to be no major repairs that are going to hit them because a lot of that's going to be covered by warranties and things. And you see a lot
have
of
to keep it
businesses-
insured just like
Right.
you would if you owned it. I mean,
Right.
You have to have proof of insurance and things of that nature.
Okay.
But a lot of times you don't have to worry about the fatigue and the failure of more of a used piece of equipment or downtime where you're going to lose production. So
Yeah. Okay. Good point. Are there any kind of upfront costs typically associated with a lease?
Again, it depends on the
It's
way
our
you
favorite word
structure
for the
it.
day.
It is.
Depends.
In the bank, if you use that word, I charge you $10 on that. But depending on how you're wanting to structure it, how you're wanting your payments, you can lower your payments if you put a kind of a down payment down on it or an upfront payment. But you don't necessarily have to have any of that. And other than making sure that you have the capacity within your insurance, you really don't have any upfront costs in that. You got to have certified operators if it's a dozer or whatever,
Right.
or CDL license if it's a truck
Right.
that you're leasing, obviously. But those would be upfront costs that you're going to have no matter whether you lease it or buy it on that. But entry level, it's very easy to get into that way.
Okay.
let's say we get into a lease with our business for a piece of equipment and we find out, we did it for a year because, we think this is going to be a good business decision, and it turns out that it's profitable, works for our company. Can we extend those leases, one down the road for another year, maybe 2 more years?
Yes. I mean, again, how you structure that lease on the front end and how well you plan gives you the most flexibility when that time comes on that, as to whether you want to just extend the lease, if that makes sense, because of the other factors we talked about, or if you want to buy it at that time. Again, the amount of flexibility you have is really up to you as to how you structure that lease on that and how it fits your financial planning at that time.
Okay. Well, let's talk about the flip side of that for just a second. And I think I know the answer to this, but we'll ask anyway. So let's say you start a line and, or it's a startup, and it's not going well. Is there any opportunity to cancel the lease before the expiration date?
Most leases are set up to where you can. Now, there is usually a cost to that. Okay? It's not going to be what I'll call no harm, no foul, but it'll be much less than you having to lease it if your lease is set up for 3 years and you're in it a year and you say, this just isn't working, and I want to get out of this lease. There'll be a cost, but not near the cost of you paying that for another 2 years on it. So there is some flexibility in that. It's easier to, what some people say, give back the equipment, but there is a cost. You can't just walk in and say, raise my hands and I give up.
done.
I'm done. Take it back.
There is a cost because they've got a cost, because they've set up their arrangement to have that leased out for a X amount of time on that.
Okay.
Yep.
Well, I guess some of that information, a lot of times we mentioned earlier, kind of the fine print at the bottom of the lease agreements that we all kind of see. And we're like, what does all that say? We don't really know. We can't. But, if we're going to get into actually signing a lease agreement. Is there anything that you see maybe that customers should be aware of if they're getting into a lease? Kind of some potential pitfalls or jargon that's listed in there that you need to look out for?
Well, again, a lot of it is what we've talked about in knowing what that residual amount is. If you're going to look at buying it at the end, making sure that the language within the lease matches your goals as to what that lease is going to do. Because as I said, you want to get with your tax preparer or accountant. Make sure what lease fits you, and then make sure that lease that you're signing fits that goal.
Okay.
And it might not even be a bad idea to have them look that over to make sure that there's nothing in it that would prohibit you from taking full advantage of whatever your goal is on that.
Right.
Okay. So, you know, a lot of times we help a lot of our businesses go to the bank to, you know, approach the bank for a loan. And I know we've got a whole separate list of, or a checklist of things that they need to bring with them when they do go talk to the bank about a loan. What would apply, what kind of documentation would apply, or what should our clients bring with them, or a business bring with them if they wanted to talk to the bank about a loan? Or about
Especially
a lease?
assuming that they don't already do business with us. If there's someone new to us, we'll need financial statements on that particular business. Typically, we'd like to have 3 years of financial statements. If it's a smaller one, tax returns work the best on that. However many owners there are, we need to know how many owners there are in the company. And then anybody that owns 20% or more of that company, we're going to want financial information on them. Because typically, on a lot of them, we're going to ask them to be guarantors on the loan, on the lease itself. And what I mean by financial information, a personal financial statement, and then tax returns on them also. So it's very similar to when someone walks in to want a loan, the same information, just like we talked about earlier as far as the underwriting on it.
Right.
And of course, we're going to pull credit bureaus, depending on the size of the business. We might look at some information that we can gain on businesses, like through a Dun & Bradstreet or something of that nature.
Right.
That can tell us, okay, these people handle their credit, whether personally or business-wise.
And one other item you probably need is a copy of your insurance.
Oh, yes.
And that's something you're going to want to see too. And I think you might have touched on it a little bit ago, but any kind of special insurance that we need for lending or for a lease, or is, you know, probably this has to be specifically covered separately.
Yeah, you'll have to have it added to your insurance. And there, I'm referring to people you have to consult with. You're going to have to consult with your insurance agent on that.
Yes.
While I'm not an accountant, I'm not an insurance agent either.
Oh, you're not?
So, but you would need to make sure that you have the type that will allow you to add pieces of equipment. And that's something you need to plan for also, is that you have the type of insurance that allows you to add and subtract as you need equipment or leasing equipment on that.
Right.
Okay. So, you know, we've talked about how to get how to obtain a lease from the bank and all the steps we need to go through. Now it's the end of the lease, and I know we briefly touched on it a little bit ago, but is it a good idea to buy that equipment after you've leased it? How does the value?
Guess what? It depends.
Depends. That's our answer.
And it depends on, okay, if you think that line is going to continue, okay, does it make sense? Does it make more sense to own it now instead of leasing it? Does my tax goals, does it work better for me to go ahead and buy it now or to lease it? Something you mentioned earlier about newer, well, maybe given the amount of work that I'm doing on that, at the end of a lease, I want to turn that one in and get a new piece of equipment.
Right.
And then you're going through your tax goals and things of that nature, but then you've got a new piece of equipment. Again, you've not had to buy it. You've got a fixed amount of cost in that, and your level of entry isn't as much as buying it most of the time.
Well, and just like any other used equipment, you know, you can take the same equipment, you know, a brand new piece with one company and one piece with another company, and maybe at company A it gets treated and maintained really well, and at company B it doesn't. And, you know, at the end of 3 years it's run the same amount of hours, but
it's not the same piece of
but
equipment.
it's not the same piece of equipment. And you know, as a business owner, how you take care of your equipment and how you service it. And if it's a good piece, it's definitely
That's
the values
another
are different.
advantage is you know that
You have a
piece
history.
now.
Yep.
You know what's been done to it.
Yep.
You know what issues, if there's been any issues with it. So you've got some history with it.
It's just like a used car.
Yeah.
Yeah.
It's time to go, or we're going to keep it for a while. So,
Speaking of time to go, I know we're about ready to run out of time. It's hard to believe. So we do want to give you one last chance to, if there's anything we haven't talked about, or maybe there are some myths about leasing that you'd like to dispel and get.
Well, the only thing that I would say, again, make sure you're planning, make sure you're getting people involved that can help you with that. And one of the myths is kind of in that planning is that you can't always expense the whole lease for the term of the lease. Make sure you get proper advice from your accountant and tax preparer so that you can take advantage of what you want to take advantage of.
Sure.
all right. Well, Bryan, thank you very much for
Well,
joining
thank
us
you.
Good
today.
information.
It's been some great information, and hopefully, a lot of our businesses out there watching will be able to take advantage of that in the future.
Yeah.
So
I've learned a lot today, and
I have
look
too.
forward to applying it. So.
I have too.
Yeah.
Well, again, thank you for joining us, and until next time, I'm Brad,
I'm Ryan.
and for Common Sense.